If you've ever looked at a mortgage payment and thought, okay, why did the payment go up? And when did my rate change? This is the video for you. Or maybe you're buying your first home and you keep hearing the word escrow and you're like, is escrow a fee? Is it optional? Why is a lender holding all my money? Why do I need a cushion? So, escrow is one of those mortgage concepts that sounds complicated, but once you understand it, it actually makes the whole homeownership experience feel a lot more predictable. So in this video, we're going to break down escrow in plain English. What an escrow account actually is, what's included in escrow and what's not, why your mortgage payment can change every single year, and how to plan so that you don't get blindsided. So if you want fewer surprise payment jumps and more control over your housing budget, stay with me. So first of all, let's start simple. An escrow account is basically a holding account that your lender uses to pay certain homeownership bills on your behalf. So instead of you paying property taxes and homeowners insurance separately when they become due, you pay a little bit each month into something called an escrow account. And then the lender uses that money to pay those bills when the time comes. So escrow account is not some extra fee for no reason, a scam, interest that you're paying the lender. What escrow is simply is a monthly system to cover big annual or semi-annual bills. So here's the key line. Your mortgage payment is often made up of multiple parts. So people think mortgage payment means just the loan itself. But for most homeowners, the monthly payment is actually as follows: principal, interest, taxes, and whatever insurances need to be covered. And I'm going to talk about that in just 1 second. And when I'm talking about insurances, I'm typically talking about mortgage insurance or private mortgage insurance like PMI, and then homeowners insurance. But there are a few things that are not included, like HOA fees, right? That is not in escrow, but it is a part of your housing cost to go ahead and keep that property. And so that is why your payment can feel bigger than expected, because it is not just the actual loan, the principal and interest for the loan. So let's break down what escrow usually covers. Escrow typically covers property taxes and homeowners insurance, and then also private mortgage insurance if that is an applicable thing. Sometimes it could also include flood insurance if it's required. And if there is any other insurance that's tied to the property, depending on the loan and the situation, if it's required, it often will be included in escrow as well. What does escrow also not include? Your utilities, your maintenance and repair fees, your HOA fees, random home expenses like landscaping or upgrades. Escrow is about taxes and insurance, mainly. Now, let's answer the question that everyone asks. Why does my payment change? And I get this question a lot. I went ahead and I signed up for a 30-year fixed rate of interest, meaning that my payment is not supposed to change. So why is it changing? Because your taxes and your insurance can change. Even if that mortgage interest rate is fixed, your property taxes can go up. Your homeowner insurance premium can go up. Your escrow required cushion will then adjust. And so when those numbers change, your lender recalculates what is needed for your escrow contribution. And that is going to change your total monthly payment. So when someone says, my mortgage payment went up, it doesn't always mean that the loan changed at all. What it usually means is that the taxes or the insurance changed. Now, the part that feels kind of annoying is this: escrow analysis. Because once a year, your lender usually reviews your escrow account, and they look at how much came in and how much went out, and how much is expected to be needed for the new year. If they find you have too little in your escrow to cover the upcoming bills, you may have what's called an escrow shortage. And then one of two things will happen. Option A, you either pay the shortage as a lump sum and they only adjust for the new amount needed. Or option B, they spread it across your monthly payments over the next year.
Stay tuned. We'll be back right after this message from our sponsors.
Imagine having the power to control your financial destiny, no matter where you start. Welcome to the Financial Mastery Simplified course and resource platform, where financial education is tailored to your unique journey. We cover everything you need, from basic budgeting and saving strategies to advanced investing and retirement planning. Learn at your own pace with lessons that match your level of experience. Whether you're a beginner or looking to enhance your financial knowledge, join our community of learners and benefit from shared insights and expert guidance. The Financial Mastery Simplified Course and Resource Platform equips you with the skills and confidence to take charge of your financial future. Ready to master your finances? Enroll in our courses today at the Financial Mastery Simplified Course and Resource Platform. Start your path to financial independence now.
Visit us at fms.tips and fms.college for more information.
Hello and welcome to PBJ Mortgage, where your home ownership dreams become reality. Today, we want to share why choosing PBJ Mortgage is the right choice for your home financing needs. At PBJ Mortgage, we're built on a foundation of values that drive us every day. Our commitment to educate, empathize, and empower our clients sets us apart in the mortgage industry. Our clients are at the heart of everything we do, and their success stories speak volumes. With years of experience, our team possesses in-depth knowledge of the mortgage programs, ensuring you receive expert guidance and the best possible rates. We offer a diverse range of loan options to suit your unique needs, including conventional, FHA, VA, and more. No matter your situation, we've got a solution. At PBJ Mortgage, we pride ourselves on providing personalized service. Our dedicated loan officers are here to guide you every step of the way, making the process as smooth as making a peanut butter and jelly sandwich. We understand that time is of the essence, which is why we've streamlined our processes for efficiency and convenience. Transparency and clear communication are paramount. You'll always know where you stand throughout your mortgage journey. Reach out to us today to set up a call to discover your options. If you're ready to make your home ownership dreams a reality, contact PBJ Mortgage today. Let us empower you during this exciting journey. Phone number 4-693-733-107 www.pbjteam.com. Visit our website or give us a call to get started. We look forward to helping you secure your future home. PBJ Mortgage, where home begins.
Thanks for your patience.
Quick tip. If you need it to be longer than that, you can ask your servicer, but usually you need to be in a little bit of a hardship position to go ahead and stretch it longer than 1 year. And this is where people panic because it can feel like, why do I suddenly owe more money? Why did my payment jump? Did I do something wrong? Most of the time, nothing went wrong. It's just tax and insurance increased, and your escrow account needs to catch up. Now, let's talk about the escrow cushion, because another piece that really confuses people. Lenders often require a minimum buffer in the escrow account. It is actually set by federal law. It is 2 months. This cushion protects against shortages and timing issues to the best of its ability. Think of it like they don't want your escrow account to hit zero right before a tax bill is due. So it often includes your estimated monthly taxes and insurance divided monthly, so divided by 12, plus the small required cushion of 2 months. That cushion makes your payment slightly higher than just taxes divided by 12 because it's there to prevent the account from running empty when that bill hits. Now, here's a huge thing that most buyers don't understand until they're already in a home. Your first escrow can feel a little weird because at closing, you may be asked to prepay some taxes and insurance up front. And then you also start monthly escrow payments. So it can feel like, wait a minute, why am I paying this twice? You are not paying it twice. What is happening is you are funding the account. So there's enough money ready when the first big bill is due because you pay it ahead, not in the rears as far as homeowners insurance go. And you typically pay in the rears when it comes to taxes. So that's why your cash to close includes prepaids and then also escrow setup. It's basically jump starting that account. So let's make this super practical. If you want to avoid being shocked by your payment, you need to stop thinking only in terms of my mortgage rate and the loan payment. You want to think in terms of my total housing payment. That includes principal and interest, taxes, insurance, PMI, and then HOA, even if it's not going to be included in that escrow account. because your taxes and your insurance can shift, and your total housing payment is what your life actually experiences every single month. Now, let's talk about the biggest escrow mistakes that create massive stress. Mistake number 1, only budgeting for the principal and the interest. People run the numbers and they're like, oh, okay, the loan payment is X. I'm good. And then the tax and the insurance get added, and suddenly the payment is hundreds to even possibly thousands more. Yes, it depends on the state you're in and how high those taxes are and how high that homeowner's insurance are. Or the taxes go up next year and suddenly the payment increases. So when you're planning affordability, plan for the full picture. PITI and even A. Principal, interest, taxes, insurance, and association dues, aka HOA. Mistake number 2, assuming escrow is random. Escrow is based on bills. If your payment changes, there is a reason. It's usually tax increase, insurance increase, shortage catch-up, cushion adjustment. Instead of panicking, ask, what changed in taxes or insurance? And what does the escrow analysis say? Mistake number 3, not preparing for insurance and tax increases, but specifically insurance. Homeowners insurance has been changing a lot in many areas. Premiums can rise, requirements can change, and some people get surprised by how quickly this can affect their escrow account. Your job as a homeowner is to treat insurance like a living part of your budget, not a one-time line item. So here's how to plan for escrow in a calm way. I'm going to give you a simple escrow calm plan. Now, step 1. When you're shopping for homes, always ask for a payment estimate that does include the tax and the insurance. Any really excellent mortgage expert is going to do this. Not just principal and interest, the all-in monthly estimate. If you get a quote that feels too good to be true, you should double check it. Do they include property taxes? Do they include homeowners insurance? Do they include mortgage insurance if it applies? This is why I absolutely hate online calculators, including some of those ones that Zillow and the like provide, because you definitely need to make sure that they're actually not only including those things, but that they're actually accurate. Step 2, keep a small payment change buffer in your budget. This is huge. Even with a fixed rate mortgage, it is wise to assume that your payment could shift over time because of the taxes and the insurance. So if you can only afford the payment, if it stays exactly the same forever, you're way too tight. A calm budget has margins. Step 3, read your escrow analysis when it comes in. Most people just ignore it, and then they get surprised when their payment changes. When you get the escrow analysis, look for what was paid last year, what's expected next year, whether there's a shortage or a surplus, and the options you have. Sometimes you can pay the shortage up front instead of spreading it over the year. Sometimes your insurance can be shopped around to see if there's a cheaper policy. Sometimes your property tax assessment can be reviewed and you can try to wiggle down your taxes. Or you could possibly file a homestead exemption if that's something that's offered in your state, if you haven't already. You are not helpless, but you do need to open the mail and understand what the numbers look like. Step 4, know your controllables. You can't always control your property tax rates, but you can shop your homeowner's insurance, update your coverage thoughtfully, build a cushion within your budget, challenge incorrect property tax assessments if that's applicable, going ahead and filing a homestead exemption or other kind of exemptions if you are eligible. Plan your purchase price so that you're not on the very edge. Now, let's do a quick example so this makes sense. Let's imagine that someone buys a home and their first year monthly payment includes escrow. Then the next year, their property tax increased because the assessed value went up, and their insurance premium increased a little bit as well. Now the escrow account is short. So the lender says, hey, we need you to pay more per month to cover next year and to catch you up a little bit from the last year. This is called a double adjustment. That's why the payment jump can feel bigger than expected, because it's not just the new cost, it's also the catch up against, hence double adjustment. But once the shortage is resolved, the payment often stabilizes again, assuming taxes and insurance don't spike further. So the key mindset is escrow changes are usually math and not mystery. So now let's zoom out for a minute. Escrow can feel very annoying because it is not fun money, but it does protect you from huge bills arriving all at once. Like in the state of Texas, our property taxes come out at Christmas time. Who wants to pay a whole bunch of money out of their pocket at Christmas time? No fun. So Escrow helps with that. Instead of getting hit with that massive property tax bill and scrambling, you've been paying it in small monthly pieces. Again, so you don't possibly have to pay it at Christmas. So Escrow is basically the system's way of forcing steady planning. And if you understand it, you can build your own margin so it doesn't feel like shock. And here's a sentence I want you to remember. A fixed rate mortgage doesn't mean a fixed total payment forever. Your loan payment can stay fixed while your taxes and your insurance shift. So the goal is buy in a price range when you have room for these normal shifts. Now, if you want one simple action to take today, please do this. Write down your 3 housing cost truths. Number 1, my calm all-in housing payment range is XYZ per month. I will keep a buffer of X per month or X in savings for payment changes. 3, when my escrow analysis arrives, I will read it within 48 hours. That's how you stay calm and in control. And before you go, I want to hear from you. Before hearing this, did you think mortgage payment was just principal and interest? Did you already know the tax and insurance were also included when it's escrowed? Drop a comment like this. I used to think my mortgage payment was escrowed, not escrowed. If you want to go a level deeper, add the part of escrow that confuses me the most is X. I'll read the comments, I'll reply with the clearest next step, and I'll keep making videos that break down parts of mortgages that feel confusing so you can move through this process with confidence. And if you want to go ahead and take a look at either what's currently going on in your situation or getting ready to buy a house, go ahead and book a call with us at pbjteam.com. PBJ, like the sandwich, team.com.